I'm with George Gero of RBC Capital Markets here. George, thank you so much for being with us at the IPMI. I know you sit on the chairing committee for the IPMI, and what a fantastic conference. Thank you for joining me.
Thank you. Also, I have to mention I'm on the COMEX board as well for the last many years, and we are now hoping next year that we have seen 700 delegates come to attend, and we expected 250, and we've got 25 countries or more represented.
Yeah.
It's really a wonderful turnout in a year when the industry has had some disappointments in the price of metal.
Right. Now, what do you feel that the sentiment's like on the floor, George?
Okay, the sentiment here so far is what I call cautiously optimistic. Okay, what does cautiously optimistic really mean is that they think that we're going to be in an upward sideways type of move into next year when people decide that the precious metals are needed for other than a momentary political or geopolitical event.
I think you summed that up perfectly, George. Cautiously optimistic was also the buzzword at the PDAC and past conferences I've covered this year, and I would have to agree with you. That's the sentiment. What does George Gero think?
Oh, I think we could have some major surprises because when everybody's complacent about something, the unexpected usually happens. And whatever the unexpected is, I mean, look, we saw what happened with Ukraine and Russia.
Right.
That was an unexpected. And of course, gold jumped up quickly because nobody knew what the consequences were. Not a possibility of war, but a possibility of a curtailment of shipments to the West of the metal at the same time while there are strike talks going on in South Africa.
Interesting.
So, of course, the metal jumped, but then seeing that today there are strike talks in South Africa again, and seeing that Ukraine and Russia have eased off somewhat, well, the price of the metal is fairly unchanged.
George, in listening to all the presentations here today, was there anything that stood out for you in particular that you said, oh, wow, that was interesting?
Well, yes, Jeff Christian's presentation was a big surprise about the difference in gold holdings in Switzerland,
yes,
and gold holdings, of course, in China, and the reasons for both. Here we are at the second half of the investing year for funds, and we're at a very low investment point for gold. As the funds have been fleeing gold, looking at open interest on COMEX and looking at the ETFs, funds have been reallocating assets to stocks and bonds, which have outperformed gold by about 28%. So as people who want instant performance in a fund have told the funds, hey, I need instant performance,
right,
money has flown out of the gold and into the other assets. However, that can likely reverse very quickly.
Interesting. Good thoughts from you today, George. Thank you so much for joining us.
Thank you. Thank you for having me.
And thank you for watching our coverage here from the IPMI in Orlando, Florida. You can email us any comments or questions and newsfeedback@kitco.com. Thanks for watching.